The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. We'll give just another minute or two for people to join before we begin. Okay, so let's begin. Welcome, everyone, to Consultant Roundtable, our third one. My name's Clark Haskins. I'm with the North America Center of Excellence. We want to thank you for joining us today. Thank you for sharing the Consultant Roundtable with your team, for letting people know about it. If there's someone you would like to have added to these meetings, please let me know. And let us know in the chat or by email afterwards. An email address is going to be a little later in the slides, and we'll be glad to get those invitations sent out. Happy Friday and Happy New Year to everyone. So our agenda for today is subcontracting without a work order. Myself and Jason King are going to cover off the operations portion, and Jason's going to cover off the finance portion. We're also going to make another attempt at survey on future topics. We've got a session on what's new. We're going to talk about Sage University as well as upcoming. So subcontracting without a work order. So because of this topic, the breadth of the topic, our objective is to limit some of the areas that we're going to discover within this limited time. So we want to cover off some key setup requirements. We want to provide an overview of subcontract without a work order process, some of the key points. Some of the other functions are standard and we're all quite familiar with them. Jason's going to get into the financial process and discuss stock accounting versus WIP accounting as it relates to subcontract without a work order. So first, let's begin and make sure we're all on the same page in terms of what is subcontracting. Now, subcontracting is the process of outsourcing part of the manufacturing operation where materials are provided to the subcontract supplier to be used in the product to be returned. Examples could include things like coating a product, painting a product, mixing a product. Some reasons why mixing of a product, sorry. Some reasons why subcontract might include capacity constraints. So we're just, the manufacturing facility just doesn't have capacity for all of the orders. It may be capital constraints where the cost of equipment may be prohibitive. And it also may be processes not core to the business. So think of maybe powder coating, think of any other coating of metals where it's a specialty operation and it doesn't always make sense to have facilities within your manufacturing operations to perform that. Now, within its simplest form, with it, subcontracting within X3 is we take a raw material, we add a service, and the outcome is the subcontracted product. So basically, if you, when I'm talking to a customer about this, in terms of explaining what a subcontract product is, I basically hold up my pen and say, my pen is the raw material. The service is going to be painting this pen. So I take, raw material 01, I send it to my subcontract supplier, and they return, semi-finished good 02. So it's a complete change of product. Now, what we're going to talk about today with subcontract without a work order are the operation setup requirements. And why are we discussing this? Because if these areas are not set up correctly, the process doesn't work within X3. So basically, the key areas are location types and locations. We have to define our subcontract supplier. We talk about location assignments for that subcontract supplier. We have product categories to be set up for the subcontract product. That's the product that's going to be returned to us. We have a product category to be set up for the subcontract service. We have some product setup as well as subcontract BOM. So first, starting with the subcontract location type. So what's key about the location type is the characteristic as you see highlighted. And we need that needs to be indicated as subcontract location category. Next to be considered, not highlighted here, is the subcontracted substatuses. Key in terms of what's showing on the screen are your default settings. You may, or your customer may want only the accepted settings, the A or A substatus, but there may be cases where you may want to have the ability to put a product allot into a R or Q status, so that's something to be discussed with your customer. Another key area to review on the subcontract lot location is your proposal sequence. You see in this case, it is all a single format, all A's. Where that's effective is you can actually enter the subcontract supplier name or a name that indicates who that supplier is, so that when you send that raw material to the supplier, you go to detailed stock, you have visibility of that material, the quantity on hand, and you see where that is. And it simplifies it by having an easily identifiable sequence code. So of course, once we've got the subcontract location type created, we go through the process of creating the location, no different than any other location creation. The next key difference is within X3, a subcontract supplier is also a customer. So you basically, why is that? Because as we go through the process, you're going to see that we're going to generate a delivery, create a delivery. And in order to create a delivery, we need to have that customer set up. And of course, you can simply simplify the entry by using the same supplier code as the customer code. And when we're creating that customer, as many of you will know, that brings in the supplier record data into the customer. This is a point where I often get a little pushback in terms of why would we do that? I don't want to do that because then my customer codes are going to be not in sequence. I'm not using the same number format. But the reality is it really just simplifies that customer code in terms of it's easily recognizable that this isn't a customer we sell to. This is a customer utilized in the subcontract supplier. Now, once we get the supplier and the customer created, we have to assign that subcontract location to the supplier and the customer. Again, why? We need to do this in order to have visibility of the inventory on hand at the supplier and as part of the process. And we're going to see that in just a minute. So on the supplier record, we assign the subcontract location on the commercial tab of the supplier record, as you see here. On the customer record, the subcontract address that we're using, the address, we assign the shipment site as well as the subcontract location in the ship to customer tab. Those values, both of those values on the customer record need to be entered. Now, for our product categories, Now we're specifically referring to the subcontract product, the product being returned from the subcontract supplier. And in this case, the flow type needs to be checked as subcontracted. It may also be selected as manufactured for future, if it's possible that the product may be either subcontracted or manufactured in that example we gave earlier with respect to subcontracting being done because of capacity constraints. You also need it to be set as bought, and then whether it's sold and deliverable, it will be based on your discussions with the customer. The product category needs to be created for the subcontract service. And basically here we identify the category type as service. Our flow types are bought. The other key piece for this product category is we want stock management set to not managed. The product. On the product record of the subcontract product, that which is being returned from the subcontract supplier, we want to enter the supplier in the supplier tab of the product record. Why? So that when we are going from our subcontract order to our purchase order, that field populates automatically for us. Now, our bill of material for subcontract. So first we need to create a BOM code with BOM type subcontracting. Like you see in my example code, we're going to the same BOM code function that we do for production BOMs, for example. What's different about our subcontract BOM versus our production BOM is not only we have our materials identified, but we also have the service that's being performed. You see in our creativity, we have test sub service, but that could be the mix, that could be the coating, whatever it is that's called. And here it can be the case where if it's coating, for example, the service might be a quantity of 1 and the product might be a quantity of 1,000. So you can have many raw materials being consumed for a single service, or every raw material can be required for each service. Could be a 1-to-1, so service to material, or it could be a 1-to-many, or any variation. And of course, we define that through our management units, just like in a production BOM. Now, some of the process areas, some key points to point out with subcontracting without a work order is first, we're going to talk about subcontract order allocations. We're going to talk about the delivery, and we're going to discuss some other subcontract functions. So first, when we're in the subcontract order, and I'll show you this in just a minute, when we click on the allocation button, we get a screen that looks like this. When I select allocate, notice the area in the blue box. We've got detailed allocations as 1, shortages as 1. Well, typically that raises a flag for us when we're doing allocation on a sales order because we have a shortage, therefore we don't have sufficient material. But for the subcontract order allocations, the detailed allocations represents the raw materials on hand, and the shortage represents the stock available at the supplier, the subcontract supplier. So this is stating that we've got one unit of the number of materials allocated at our site, and the subcontract supplier has 0 units on site, so therefore they have a shortage of 1. And as we go back and we think about the locations, X3 is looking at that location we assigned to the subcontract supplier to have that stock visibility. The subcontract delivery is the point that I've been red-faced a couple times at the customer. And so the key points here is number 1 is that the type for the delivery, so this is a standard delivery function, and my type is set up as SDC. When I go to the right of the screen and see my delivery types, I've got a specific type assigned with the delivery category for subcontracting. This is critical. So when and in my case, what I did is I created a separate entry transactions just for subcontracting. Therefore, no one's required to remember to change the type because that's a tripping point. Number two, we look over to the left list, and what we're doing here when we're selecting our product to be delivered is we're going from the subcontract shortage selection column or selection tray, and we see our raw material to be added to this particular work order. I'm sorry, not work order, for this particular delivery to go on the subcontract order. A couple of the other transactions that we're not discussing today with respect to subcontract without a work order. First is there's a function within sales, and that subcontract material returns. So if there's additional raw materials at our subcontract supplier, we would utilize this function to return those materials to our facility. The second two functions, the subcontract transfer and the subcontract returns, they are similar to the intersite transfer, like my friend Steve refers to as the Star Trek transfers, where basically when we process a subcontract transfer, the creation of that record moves the inventory immediately out of your facility to the subcontract supplier site. If I stand on my soapbox for a second, if we have an ERP system that tracks inventory, my expectation on the high level is that if I say I've got a quantity of 10 units in location A, my expectation is it's going to always be in location A, and I shouldn't have to leave my desk to confirm that. So based on that expectation, utilizing these subcontract transfer, subcontract return functions, that means maybe they'll be there, maybe they won't. So while that's an easy way to process, that they may not be the best in terms of the overall view, overall process, overall expectation of my inventory being exactly where I expect it to be. I'll step off my soapbox. I'm sure we've all been on that same box when we're face-to-face with the customers, but I just wanted to add that. Let's take a look. Jason, can you, I'm gonna make you the presenter if you can show.
Sure, Clark. Okay, you should see my screen.
Got it.
See X3.
Yeah, I've got it.
Okay,
perfect. So from here, Jason, could you navigate to, we've created a visual process flow just to simplify the functions involved with subcontracting. You see we've got our subcontracting data covering the various topics we discussed today with location, type, supplier, customer, everything across the top. We're going to look at the subcontract purchase flow right now. So basically what you see is the flow goes from the subcontract order. From the subcontract order, we create the purchase order and the delivery. Once that delivery's been picked, we go to validate the delivery. After we've got the purchase order generated from the subcontract, when the subcontract supplier returns their product, we have our receipt. We've got our purchase invoice. That's an error on my space for my process flow. And then we go through the step of a mass closing. So Jason, can you take me to the subcontract order, please?
sure.
Perfect, thank you. And can you select from the left list order ending in 15?
Okay.
Awesome, thank you. So when we're in the subcontract order, you notice on the header portion, we see our product. This is the product that we're expecting to be returned from the subcontract supplier. We've got our supplier identified. In the released product tab below, we've got our purchase quantity field. That's indicating the quantity of the subcontract product we're expected to be returned. And of course, notice that's in the purchase unit, not the stock unit. So think of the same way. This is coming from your bill of materials, your subcontract, in terms of what that is, your purchase quantity, set up on your product site. Product record, tab. Got marbles in my mouth today, must be Friday. We see on our status currently, our released product is on hold. Allocation is not allocated. Released product tracking is on hold. Jason, can you select order ending in 10, please?
Yep.
Perfect.
There we go.
So here's an example where we've got a completed order where the release products close, allocations complete, and we've got our cost price calculated just to give you that visibility. Jason, can you jump back to that order ending in 15 for me? Perfect, thank you. And can you scroll down? Notice on after a release product, we've identified our service. This is the service to be performed. Our quantity is listed as 10 and our price is assigned to the service. And so when we think about what we're paying for, we're thinking about the cost of the service plus the cost of the raw material we provide to the subcontractor. That service is what the subcontractor is going to provide us. And that price is the price for that service. The subcontract service may include additional products, additional components being added by the supplier, the subcontract supplier. But because they're their materials, they're not our materials, we don't list those on the material list because they're not being consumed. We're not concerned about the inventory of that product. So that in the case of a service, it will include the service and any materials the subcontract supplier is providing. Perfect. Jason, can you click on the allocate button?
Mm-hmm.
So as we saw before, we're set our number of materials on this order is 1. We have no allocations, no shortage. Our allocation type is set to detailed. Jason, can you click on allocate? And you notice now our detail allocations is set to 1, meaning we've got inventory on hand of a raw material at our site, but we have a shortage of 1 because the subcontract supplier does not have any inventory available. Perfect. Jason, can you close that for me, please? And notice our allocation is listed as complete and shortage. And Jason, now for the next step we want to do is we want to generate our purchase order. Can you select order? And so basically this is the same idea where our purchase quantity is listed as 10. We can modify it. Our supplier is identified coming from the product. And it's just a matter of selecting order in the upper right. We create our purchase order. We're provided with a log identifying that we don't have our products just selected on the site specifically. And we've identified our purchase order ending in 31 that's been created. Perfect. Jason, can you close out of here? Back to our process flow. And can you go to the purchase order, please? And we'll select the first one ending in 31. And so the top portion of our PO looks the same as we would expect, nothing different here. And let's go down to the lines. So on our lines, we see our subcontract product that's being returned to us. And we see the subcontract service that's being returned to us. Notice in this case, it was a 1-to-1 ratio set on our BOM. So we've got a quantity of 10, and we've got our gross price. Notice the price is on the service, but not on the subcontract product. This is correct. This is what we expected to see. There's no cost for the product because it will all be rolled up. A price list can be created for that subcontract service to populate the PO for us, but provides that same ability. So the PO itself is no different. Your lines, there's a slight variation, and it's acceptable in this case it's expected, not acceptable, to have a gross price of 0 for the subcontract product to be returned. Perfect. Yeah, if you could close that. And then let's go to our delivery. And if you can hit the new button for me. Thank you. And in the supplier, the ship to field, can you enter, the last one, subcontract supplier, perfect. So from here, notice our delivery by default, our entry type is SDC. So the type defaulted to the subcontract supplier type versus us coming into a standard delivery and having to select the type. From here, we would go down to our left list, and at the bottom, our tray subcontract shortage selection. There's our product for the delivery. Now, this is appearing because all of our other setup is complete in terms of the locations. If we didn't have the location assigned to the customer, this function would not work. We would see no products listed on our left list. If we did not have our customer set up, we wouldn't be able to create a delivery. And so these are areas why on the operations side, we wanted to point out what seemingly simple steps, but they're critical requirements for this portion of the process to work correctly. Okay, Jason, so we've got 10. Can you go ahead and create the delivery, please? Great, and then of course we would print off our printing pick ticket to our delivery note to be validate to pick, and then we would come back and validate that delivery. Could you click that, Jason? Perfect, thank you. And then from here, can you go to the detailed stock? And our product that's it. And then hit search. So you'll notice line number 2 showing after the delivery's been completed, we're showing the quantity of 10 at the subcontract location. It would have been a little more evident if we created, supplier name as opposed to subcontract as a supplier, but certainly gives us the ability to see and notice the categories where it's internal for the stock on our site, and the location category of subcontract to indicate that inventory, while it's available to us, we have visibility of it, it's actually at the supplier location. And there's a parameter that provides you the ability to determine whether or not that inventory is to be taken into account during your MRP calculations. Perfect, Jason, thank you. So if you could go to the receipt, and you'll see from our receipt function, nothing's different than what we'd expect. We see on line 1, we've got our subcontract product, and on line 2, we've got our subcontract service. We're simply going through the process of receiving those 2 pieces in. So we're receiving an inventory quantity of the subcontract product, and we're receiving a quantity of the non-managed stock service. And you can close that, Jason. And then we've got the purchase invoice. And then so here again, our invoice is processed in the same manner, where we've got the invoice type as inventory, we've got our supplier entered, and we've got our two products that come from the receipt selection. So nothing's magical here. It's the same process that our AP team or our purchasing team is performing every day. In this case, we have a variance where a net price actually came in at $52.50 for the service rather than $50, and that's indicated on the on our lines. And then here's our detail lines, excluding tax detail is shown. And you'll notice in this case, we've been able to effectively post this invoice. Am I missing anything here, Jason, on the purchase invoice we want to cover?
No, I think I'll circle back to it in my section, Clark.
Perfect.
Yeah, it's just a standard invoice that you're entering, and you're pulling in the receipt like Clark described, and you're seeing the subcontract product coming back from the subcontractor and the service being added. And this is where, as seen here, you can adjust the price if it comes in different.
Great. Yep. Go ahead and close out of here. And then from the next step is the mass closing. So this gives us the ability to close, like we close work orders, this gives us the ability to close our subcontract orders. We can do that on a range, or we can do that on individual order selection. And we can calculate the actual subcontract price as Jason's indicated at the bottom left of the screen. Great. So Jason, I'm going to make myself the presenter. Thank you very much.
Okay, you're welcome. Okay, so yeah, time for me to go through the PowerPoint here. So we want to cover some of the finance aspects of the subcontracting without a work order, and some of the key settings that are in the setup that we're reviewing today is the assumption that the Anglo-Saxon accounting parameter is turned on, and the postings that you're going to see are valid for North America. The folder that we're looking at is also version 2022 R3, just so you know, if you're comparing to any auto journals or anything along that line. So those are the key settings there. We also have the parameter, a key parameter in the setup is the SCO IFA general parameter, and that concerns the interface that you're going to post the subcontract transactions through, and that could either be set to a yes or a no. When it's set to a no, the postings for the transactions run through the stock interface, and when it's set to a yes, it runs through the WIP posting interface. So in that case, you have different series of auto journals that are being executed, whether the parameter is set, whichever way the parameter is set. And so I've tried to illustrate for you the differences in the flow and the type of accounting entry you could expect in the upcoming slides. It is important once you set it, I would say, not to flip it back and forth, okay? I have seen problem with that in the past. So generally, the entries get recorded in the STOJO table, the stock journal table, and the WIP cost table, regardless of this parameter. And so this parameter then determines which of those tables it uses to post the entry to the GL and the automatic journal, as I mentioned. Also, in the upcoming slides, the the work orders or subcontract orders that we were looking at use standard cost for all the components. So that's another key, although I have tried to highlight what it would look like for you if you were using an actual cost method as well. Next slide, Clark. Some of the general parameters that we have in our setup. So we have as shown here, the CEO CAUT auto provisional costs. We have that turned on to increation and modification. We have the Anglo-Saxon stock accounting interface set to either a yes or a no. I'm going to show both cases. And then we have some general parameters in the TC chapter under the costs group. Like I said, we were assuming standard costs when I was putting together some of these examples, but I do have examples where I flipped the parameter and changed it to average cost as well for the last three parameters shown on that screen there. Next slide, Clark.
Whoops.
These are some key knowledge base articles that Clark and I selected for you. The first one especially, I think I found was quite comprehensive in that it had the setup and the process outlined within the KB there. And it also had links to a series of other KBs as well from that. So you can take this information and take a look through those KBs. There was also a really nice blog post on the support site that I'll call out here if you want to get more details on setting up default dimensions for the subcontract process. So we won't try to go through that today, but just want to mention that that blog post there. Next slide, Clark. Yeah, so as I mentioned, the SCO IFA parameter can be set to yes or no. So I wanted to give you an idea when it's set to no what the process flow looks like along with the bookkeeping entry. And this assumes standard costs in this slide. You know, in the flow diagram on the left, it's assuming standard cost, but on the right-hand side, I tried to break out the entries in the two boxes, standard cost compared to actual cost, and I was using average cost in my examples. Okay, there is some specific setups that I had, which I'll go to in just a moment in another slide, that generated these types of entries. And so, you know, in the flow diagram that's shown there, we just went through a moment ago, you had the subcontract order and you did your allocation, you generated a purchase order. And then off of that purchase order, you went and did the sales delivery, okay, and then we validated it. There's no bookkeeping entry that's happening there. It's just moving the stock from the internal location to the subcontract location. You also had the option of doing the subcontract transfer. We didn't show that, but Clark spoke about it. And once again, that would move just from the internal stock to the subcontract location, and there would be no bookkeeping there if you chose to do that entry as well, because we still technically own the stock. Kind of working your way down again in the flow, the next thing you have is the purchase receipt, going and matching up to the purchase order. In this, when the parameter is set to no, you run the, what that does, like Clark mentioned, it brings the subcontract material back, and it actually takes out of your inventory any subcontract, any materials that you're sending to the subcontract. So in that case, it's decrementing your inventories. In the Stojo table, you would then run the stock accounting interface, which is key here, and it would generate two entries. There is some specific setup that we didn't mention. In the receipt entry transaction, you have to add another auto journal, and that's referenced in the KB. You get two entries out of that, entry A and entry B, I called it. Entry A is the material that's coming back from the subcontractor, so it would typically debit inventory, credit GR&I, and entry B would be the materials that went to the subcontractor. So there it would debit R&I and credit the inventory. And that would depend on the accounting codes that you have set up on those items. Next, you would, after doing the purchase receipt, you could also look at an inquiry called the EO cost inquiry or the external order. And this would give you an idea on the cost. Lastly, you have your purchase invoice that you match up against the receipt. So this is a standard flow, really. The purchase receipt and purchase invoice really doesn't look different too much from the standard, other than the parts on there, like we highlighted. So in this entry, you would have your standard posting of debit GR&I and credit accounts payable there. And if there is a price difference, one key kind of thing that I found when I went through this again is that price difference doesn't automatically run through the stock interface. So when I ran the stock interface, I didn't see that price adjustment. And I didn't get that price adjustment reflected until I actually went through the mass close process where I did the costing of that subcontract order. So that's where I saw the adjustment actually flow through. And that would have closed out the GR&I and booked the debit or credit to the PPV, in the case of standard costs. So that's what I saw there. So that was a little bit different from standard purchase invoice posting where you have a price difference. So I wanted to call that out. On the right, you see some of the bookkeeping. I'll let you take that away. Everything I just went through is reflected there. Key thing here that's different between standard and average cost is you have the PPV posting on the standard cost side, and you don't typically have that on the average cost or actual cost side. It would absorb that difference into the inventory itself. Next slide, Clark. So same idea here on this next slide, but with the SCO IFA parameter set to yes, again, standard cost. I won't go through all the details here, but the key thing here is when you run the purchase receipt, it again decrements inventory, but this time it runs through the WIP interface, okay? And the entry A and B is really a combined entry, okay? And it runs through the WIP auto journal. So that's a key difference there. And you see the entry on the right as to what it would look like. A key thing here is that instead of running through the GR&I account, it runs through the WIP account, the inventory WIP account. Yeah, so the key thing here is that the process is the same, but the way that you record the entries into the GL is through the WIP interface rather than through the stock interface, okay? And in this case, it's using the WIP cost table to get those entries in the WIP auto journal. So next slide, Clark. This is just an alternate posting. I'll describe this in a little bit more detail on the next slide. So what I found, I put together this T account comparison for you to give you an idea. Again, this is standard cost. Okay, I didn't mention that here. But on the top set of T accounts, you have the accounting interface when the posting is set to no. The SCO IFA general parameter is set to no. You can see that it runs through the GR&I. You get purchase price variance, okay? And I tried to highlight for you what entry A, B, C, and D actually mean there in those T accounts. So key thing here is it runs through GRNI. When in the middle, when it's set to yes, it runs through the WIP posting. It it runs through the WIP account rather than GRNI. And one key thing that I highlighted here in red for you is that in my setup, when I had this set up a certain way, it ran for the applied subcontract through the applied subcontract account. And I actually highlighted in red because I didn't like the fact, like over a month end, that if the invoice didn't come in, which is entry C for this 58,400 account, that amount would be sitting as a credit to the P&L. Okay, so I did a change to the accounting code. No changes to AutoJournal, just accounting code. And that's the last series of T accounts there in the alternate posting. And instead of running through the applied subcontract, I had that running through the goods received not invoiced. Okay, so even though I had the SCO IFA parameter set to yes, I wanted that piece to run through the GRNI account, so that if the invoice didn't come in at the time of month end, it would be a liability rather than a credit to P&L. So I think that's a key thing. Like, so I've had in my experience where I've seen some customers use the subcontract quite extensively, and it could be quite material, and the subcontract could remain open over a period. So that's something I think to keep in mind for finance folks as well. Next slide, Clark. And I know we're running kind of late on time here. So the accounting code, these are my assumptions that I had in my setup. So what I'm trying to highlight for you on the left is the when the parameter is set to no, what my products were, what my accounting code was, and the key lines on in the accounting codes that were used and what accounts were tied in there. Okay, so for the raw material, in our case, we had the raw material set to the component going out to the subcontractor, and we had also classified it as a raw material coming back. So that's a key thing in our setup. You could have something slightly different there. You might classify the part coming back as semi-finished. Then I had the subcontract service, and you could see the accounts I had. I highlighted the STK-RE AutoJournal, which is used in this setup, and the lines that are used. Okay, I didn't, there is another AutoJournal, STK-RC. It's not shown on the screen, but it uses, I think that's supposed to be line 1 and 3 there, actually. And the purchase invoice PIHI AutoJournals. Okay, next slide, Clark. Same type of thing for when the parameter is set to yes. Here are my setups. You can see that for applied subcontract, I had it running through the 58,400 account. This is using like the standard chart of accounts for North America. Okay, and in this case, it's using the WIP AutoJournal. So I highlighted some of those lines that are actually being called in the AutoJournal. Next slide, Clark. This is the setup that I utilized, I should say, in order for it to go through GRNI on that posting rather than the 58,400 account. So next slide, Clark. Right, so I will, yeah, if you can make me a presenter. And I'll share my screen again. Okay, thank you. You should see X-ray again. Clark, can you confirm for me?
Yes, I've got your screen, Jason.
Okay, perfect. So I'll try not to take too long here. We have the landing pages that we put together for the stock versus the WIP when it runs through. Now the process is the exact same. The only difference is when it's running through the stock, you run the stock posting. the stock accounting interface. And when it's running through WIP, you run the WIP posting interface. Okay. A couple of other things to make mention of. If you're using standard costs, we did a standard cost calculation. Okay. And in that calculation, so we would have done the products, and we would have changed this here to subcontracting. Okay, and then we would have chose a subcontract bill of material. So that's one thing that we would have done there to establish the standard cost on the subcontract bill of material that Clark showed. The other thing to make note of is the inquiries that are available. Okay, so there is a subcontract WIP inquiry, very much like the WIP inquiry you have for work orders, right? And so if I look at, I'll just try to finish off here because I know we're running out. We want to cover a couple more things. So you have the subcontract WIP inquiry that shows you the material and subcontract and then any variance. And you remember on our example that we had a $25 variance on the invoice, okay, for that subcontract. So that shows up here and that shows up in our postings. All right, I think I will, yeah, I don't know if I want to kind of stop there. Production cost. Yeah, I could probably stop there, Clark, since we're running out of time and we have a couple more things to cover.
Okay. So I guess I talked too much again, imagine that. Carrying on, survey question. So this is a continuation from our last consultant roundtable, whereby we attempted to send a survey question and for some reason it didn't work. Still learning this GoToMeeting technology. We only use it in the roundtables. So what we're doing is we're looking for feedback. We want to know future topics, whether we want to expand further on subcontracting, anything else you can think of. And there's a second question asking for feedback. Here's an example of this, or not example, this is what the preview is. Please provide suggestions for future consultant roundtable topics, and please provide feedback on consultant roundtable. We're looking for what you like, what can be improved, other than Clark talking less, and any other suggestions. So this survey is going to appear at the end of the webinar. So don't close right out. It's going to pop up when I select end. If by chance it doesn't happen for you, here's my email address. Send me your responses to the questions above. We'd love your feedback. What's new? Our what's new is a little different today. We're really excited to announce, some of you may already know, but a new partnership between Major League Baseball and Sage. The purpose of the partnership, Sage is teaming up with Major League Baseball in a sponsorship deal. With the new partnership, Sage will sponsor pitching decisions and manager interviews, providing insights to fans around key in-game decisions. What this means is that we will integrate with MLB broadcasts, Major League Baseball broadcasts, and show fresh insights and in-depth analysis around pitching to fans from all 30 Major League Baseball teams during the regular season, postseason, and All-Star Week. I understand some of those will include in-stadium events for postseason and All-Star Week sessions. This is pretty exciting in terms of exposure. If you think of the number of professional baseball teams playing 162 games per year. So this is really big news in getting the Sage name out there. Another key point of the sponsorship is it outlines our support of Major League Baseball's diverse business partners program, which helps to find new opportunities and to support business growth for minority-owned businesses across North America. So this is a fantastic new way to get that Sage name out there. First time it's being done in North America, and we're very, very excited by that. Sage University for You. The reason why, I don't know if we've mentioned that previously, but there's been lots of changes at Sage University from when I first started at Sage almost 6 years ago till now. The content and the programs have improved greatly. They're fantastic. The Knowledge Bite sessions, these are hour-long sessions covering an overview of some topics. A couple that I want to point out is on February 6th, we have the new features and tips and tricks for using Sage Data Migration Tool, the DMT. This was the topic from our first roundtable. Another session to point out is come and see the new preventive maintenance module for Sage X3. That's on February 21. We're really excited to show you that as well. Expert sessions. So this is a listing of the classes available from the expert section category. In the handouts, there's a more detailed list of the offerings available from Sage U. Jason, do you have any input on these classes?
Yeah, I think the automatic journal is an absolute necessary one to attend. I think that's a great one. It goes into a lot of detail. I attended it some time back, and you know, I learned some new things as well in that. So I thought it was really well done. The advanced bank statement one that's coming up, I'm actually going to be attending that as well. So looking forward to it.
Awesome, thanks, Jason. In the distribution manufacturing, I've attended all but the Understanding for GL. I highly recommend the distribution best practices, tips and tricks. I learned a lot out of that session. The others were good too, but that distribution best practices really stands out. I also wanted to point out the highlighted session. While it's not an expert class, this is the first time for Sage X3 that Sage University has an ISV providing a session. So Procession is coming in to do quality control, and that's at February 22nd. So I'm really excited about that. I'm registered for that one as well. Looking forward to it.
Clark, I was going to say the ABC stock valuation was one that I really liked as well.
Right, and it's listed under distribution. It is good to know from a distribution per side, but finance, it really digs deep in there. Thanks, Jason. Here's a listing of some of the expert classes offered as well. And again, there's the handout available to you. Upcoming, our next consultant roundtable is on Friday, February 17th. Again, our consultant roundtables are on the third Friday of each month. Look for your invitation from Channel Communications. Sign up at Sage Partner Hub. It gives you the screenshot you see here. Webinar session is while you're signing up for one, it gives you the ability to sign up for multiple so that you have them on your calendar. Like I said earlier, if you know somebody who wants an invitation, please reach out to me. We send out manual invitations as well, and we can add them to our list. A big thank you for everyone attending, making these sessions very successful. Remember, when I go to end the session, a survey is going to pop up. If you don't see that, please feel free to send me an email with your insight. I will be sending a PDF of our presentation with all the detail for you to review after the session. Again, thank you everyone for attending. Thank you, Jason. Thank you, Scott, for manning the questions. And have a great week. Have a good weekend, and thank you.